And we're live.
All right. Hey, everyone. Welcome to State of the Nation. This is episode 10. David, this is the first time we are live streaming this. Pretty exciting. How are you doing, sir?
Pretty good, pretty good. Breaking out my live streaming skills. Turns out it's not so hard. So yeah, we are now going to live stream the State of the Nation. So we're going to get a little bit more consistent with the time. So I think we're doing 7 a.m. Pacific, 10 a.m. Eastern time every Tuesday. So make sure that you tune in to the Bankless live stream to get that done. You can find it on Twitter, but honestly, we prefer you to go to YouTube because the YouTube comments are just better there. And so you can
Wait,
subscribe to
wait. Did you say YouTube comments are better?
then Periscope comments. Yeah.
Oh, okay.
Yeah. Yeah, we just want everyone to be in the same room. So if you're watching this, go to the YouTube. Also, while you're there, subscribe to the YouTube so you get these alerts that we are live streaming.
Awesome. Very cool. Yep. Super exciting. This is starting about 10 minutes late just because we were going over some technical issues, but we will work to start this promptly at 10 a.m. East Coast time. I think that's 2 p.m. UTC if you're international and tuning in that way as well. All right. What do we do in State of the Nation? We talk about what's happening. So, in particular, what happened the previous week. We try to relate it to some of the big picture themes that we talk about in Bankless every week. And we always like to show you some visuals, to drop some insights, and to drop some action items. A couple of quick announcements. We had Kane Warwick on live AMA last week. You've got to check that out. That's now published in the podcast feed. So take a look at that. We're also publishing a podcast today with Charlie Noyes. So make sure you grab the Bankless podcast feed and subscribe there. The Charlie episode is just fantastic. We talk a lot about ETH as a monetary asset, why it needs to be a monetary asset. Charlie works at Paradigm, which is one of I think the most interesting crypto funds in the space. We're also dropping Tactics, so Tactic on YEarn today, and then some killer articles later this week that you're really going to like. So get on the program. David, before we begin, we should talk about our sponsors. You want to tell folks about Gods Unchained?
Yeah. Gods Unchained is going to be really perfect for this particular State of the Nation. But Gods Unchained is a game, and it's a game very much like Magic the Gathering or Hearthstone or Pokemon. It's a trading card game, and everyone loves Magic the Gathering because it's like a very social game, and you play right across from another person, and you play with like physical cards, like you own the cards physically, kind of like owning cash physically. And then Hearthstone is that same game, but in a computer form. But Blizzard, the company, owns your cards. Like you purchase the cards from them, and then they give them to you, and you can play with them, but you don't own them. They can take them back from you. You can't trade them. There's no marketplace. Gods Unchained is the perfect marriage between a physical card trading game and a digital card trading game because you own the cards as tokens on Ethereum, which is really, really cool. And other than that, it's just a fantastic game to play. Like the game graphics are just super sexy. I have a fun time playing it. I've put like 50, 60 hours into it. So you can check them out at godsunchained.com. And the greatest part is when you win games, you get packs and then tokens show up in your wallet. And it's fantastic. Somebody has actually by playing Gods Unchained, has made the minimum wage more than the minimum wage in their home country of Brazil, I think, which is a pretty fascinating story.
Oh yeah, we did an article on crypto gamers and how much money they're making. There's some really interesting analysis on that. I think anyway, we'll include in the show notes. But you can make money this way. Also, want to tell you about our second sponsor. This is AAVE. So AAVE is a friend of the show, has been doing incredible work in the lending and interest space. So it's a money protocol that allows you to deposit a crypto asset in, so an ERC20 or ETH, for example, DAI, for example, Link or USDT or USDC, any asset on Ethereum, and you receive interest back on the amount that you deposit. You can also borrow from it. And this team, the Aave team, is just like iterating on their protocol so fast. Last week, they just announced a V2 of Aave, which I think is going to be absolutely fantastic, like amazing. I feel like bit by bit, we're taking pieces out of the existing banking system and we're moving it from like a bank and a building and thousands of employees to actual code. That's what Aave is doing. They're also like blowing up the DeFi leaderboard chart. So 2 Comma Club, congrats Aave, well done.
Congrats.
They are at a billion in locked value in the AAVE protocol. So are they the second
Wait, isn't
protocol to
that
do
Three
that?
Comma Club?
Oh,
Three
three
commas.
comma club. Thank you,
Got to get
David.
Pierre to come and audit your commas, bro.
Yeah. So now there's actually, I'm looking at DeFi Pulse right now. We've got Maker, who reached over a billion. They're leading right now. AAVE number 2 and Curve number 3. So anyway, check out AAVE. Super easy user interface. That's at aave.com, AAVE.com. We'll include it in the show notes. David, I want to ask you the question I always ask at the beginning of State of the Nation. What is the state of the nation today, sir?
The state of the nation is gaming. We are all gaming. I am
Okay.
literally gaming I was literally gaming last weekend when I was playing playing Gods Unchained. But also, even earlier than that, I was gaming by farming some yams and playing these money games on Ethereum, which we all seem to start to kind of get a little bit more. There's just a lot of more exposure around these things, and people are starting to realize that they are much more like these massive multiplayer online money games. Like, it's a new genre of games, and it's all about wealth maximizing, and that's basically what has happened over the last month of the DeFi world. And so we're, again, like kind of how we're stretching the definition of a nation when we call it the Bankless Nation. We're also stretching the definition of a game by calling it like a money game. It's a different type of game, different rules, different players, different win conditions. But I think it's a fascinating concept, and we're gonna go into that in this episode.
Yeah, I saw a tweet from Hasib, who we actually are releasing an episode with. He's from Dragonfly, he's an investor at Dragonfly, and he said something to the effect of, I knew crypto gaming would come, but I didn't know it would take the form of yams, right? It's like it's for a long time, it's been a meme that like one of the biggest use cases is going to be gaming in crypto. And I believe that's true. Gods Unchained is an example of that. But also, so are these money games. So is all of the kind of the yield farming that's going on. The stakes are maybe a little higher and a little different, but these are absolutely games that we're playing. So maybe we should start there with topic 1, David, because you wrote a fantastic, you've written a few things on money games, and you wrote a post yesterday that sort of summarized what's going on a little in some of these things. Maybe you could get into that. So the post is called Ready Player One, and I'm going to bring it up on screen and talk about that for us.
Yeah, so this came out of a very early article I think I wrote last November called Ethereum, the Money Game Landscape. Again, I always use Ethereum as refer to it as a landscape, like it's a physical plane of existence. And there's different options, peaks, valleys, different tools, different parts of the landscape that do different things. And so as a money game, landscape, there's different constructions to be playing different games, right? And so I think MakerDAO, when the thing that like kind of brought the DeFi world into existence is the first example of a move that you can make, right? When single collateral DAI was issued, there was a move enabled, like there's a new valid move on the board, and that move was to deposit Ether and mint DAI. And you had specific rules and parameters for making that move, but that move is now available. And over the course of the bear market, what we've seen the growth of DeFi, what we've really seen is the explosion of the growth of possible moves, right? There are more things for us to do, and each move offers you some sort of strategy to create, right? And so all these people that have been like, especially the people that have made a ton of money now, they've been practicing their games, they've been gaming for the past like 2 years in DeFi, practicing their moves, learning how to make moves, learning what moves work and what moves don't. And as the DeFi ecosystem gets larger and more complex because there's more like different boards, there are more total moves, and now some people are really good gamers and other people are not so good gamers. But the cool thing about Ethereum is that you can pick your level of difficulty. You largely play against yourself. Like there are other people that you have to compete with, but it's really mostly a single player game inside of this like MMO universe.
Yeah, I think that so if you want to play on easy mode, right? We've talked a lot about sort of, this is not financial advice, but we've talked about portfolio construction a little bit, right? Easy mode in crypto is you buy the reserve money assets, you buy ETH and you buy Bitcoin, right? And if you do that, it's pretty passive, basically, because you can benefit from all of the upside. But harder mode, right, is when you start playing these money games with each of these particular protocols. And you talked about 4 valid moves, right? And it's funny because all of these, well, I guess synthetics is has been around for over a year, but the other 3 are relatively new moves that just came on the board, and almost like they were inspired by synthetics. But comp and compound, for instance, I mean, that just came out in May.
Right.
Can you talk about each of these new valid moves, David?
Yeah, and so each game, speaking of these protocols as games, each game kind of makes moves, and they're similar but also different, right? And as you said, synthetics kind of did the yield farming before it was called yield farming, right? That's why Kane in his bio on Twitter has the father of modern agriculture, because
he does.
Which is true.
Awesome.
This is true. He created the concept of like issuing rewards from the protocols in order to sponsor certain moves, because synthetics as a protocol wants you to do certain things, right? It's
wait. Don't you think Satoshi should be able to claim that title though?
Yeah, you're right. Yep, you're right. But
no. Good.
Until he does, though. Until he does.
Or she, or
yeah,
they,
or she, or they, right?
Yeah.
Or it, or whatever. And so Kane and the synthetics team like made this very prescriptive statement saying like, okay, we are going to encourage this type of move by issuing these rewards, right?
Right.
Compound and comp with yield farming kind of expanded that and said, okay, you can get rewards by supplying any asset or borrowing any asset. So they kind of expanded the horizon of how you receive protocol issued rewards. And then it also included the governance module. And the governance module over Compound from their native comp token is important in the game because that is the thing that is really incentivizing cash flows at its very essence, right? Because it governs over the cash flows. Then AMPLFORTH brought this rebasing mechanism, very simple. And with it came this massive game that was just played around this one move. And basically, AMPLFORTH is a one move type of game. It's like you buy and then you sell. And you do that, and because it's speculative, because it's a non-dilutive asset, it's a game of accumulation, but it has this like reflexive repricing thing that makes people play it differently, right? And then Urine and Yiffy came around, and it made this scavenger hunt where there's a bunch of different moves, but they're elsewhere, not like comp where it's in the protocol, but it's elsewhere. And then I think what was really cool was that YAM and YAMS and all of the activity around YAMS was really a collection of all of these moves. And so YAM created this brand new game that was a collection of all these things.
These games inspire each other. Someone in the comments called it the money Farmville. And that's basically what they are, because they're also games that you play socially. There's this whole social dynamic around things like YAM or AMPLFORTH or SNX or comp. And I want to get back to the comment I just made about Satoshi, right? Because some people, I think, don't recognize that Bitcoin is a scarcity game in itself, right?
It's the most simple.
The most simple, like it's almost... yeah, people don't like the term Ponzi game, right? But to me, that's different from a Ponzi scheme. So a Ponzi scheme is something that's non-transparent. The centralized planners of the scheme are siphoning money. They're giving false numbers out in order to trick investors. Basically, a Ponzi game is simply a scarcity game where those that get in early are rewarded disproportionately relative to those that get in late. And that's what Bitcoin is, right? The entire I guess motif, the entire operating line of thought and social layer is like, I'm going to buy my portion of the 21 million Bitcoin, and I'm going to hold. Right. Nothing's going to shake me from holding. Like, that is the original money game. And if you think about it, that's what backs, like those types of money games are the things that back the entire like value
Yeah.
proposition of the bankless decentralized
Mm-hmm.
money space.
The fact that people are playing the game makes the game real.
Right.
Mm-hmm.
Right. And it's harder to see with Bitcoin because, oh, now, Goldman Sachs is saying you should have a little Bitcoin in your portfolio.
Mm-hmm.
Right. And big investors, it's become institutionalized. So it's become like socially accepted, but it wasn't when it started. It was a game that most people in the mainstream completely dismissed as a scam, as a scheme, as, nothing that would become the movement that it has. So at some level, like all of crypto is backed by these types of games with one like degree of credibility or another, wouldn't you say?
Yeah, absolutely. And it's all bakes down to a wealth maximizing game. And that's what
Yes.
Bitcoin is in its essence, right? It's a wealth maximizing game that is also a game of chicken, right? And
Yeah.
we see Bitcoiners playing this game when like Bitcoin takes a dip, and then they all go to Cash App and they buy some Bitcoin, and then they take a screenshot and then they post it to Twitter
They
and say,
socially signal.
they
Yep.
socially signal, and then they say, I'm never selling. And
Right.
basically what that's saying is like it's the game of chicken. If two Bitcoiners are driving straight at each other, 200 miles an hour each car, then they're signaling that both they're going to run right into each other because they're not ever going to leave the game of Bitcoin because they're never going to sell. And that reinforces the game because the price floor of Bitcoin is determined by how many Bitcoiners are committed to buying Bitcoin and never selling it, right? And so that makes the game valid for other people. Because if you are, as an investment firm, see like this army of Bitcoiners that are all buying like 0.01 Bitcoins on the Cash App and then signaling that they're never going to sell, you see the available supply of Bitcoin becoming less and less available to you. And so that, as an investment thesis, it goes from a game to an investment thesis. And the investment thesis of Bitcoin is that everyone's going to be playing the Bitcoin game.
Well, some people are like, but David and Ryan, like you just made the entire space seem super scammy just now by talking about it in those terms. And I just go back to that's exactly what gold is, right? Like gold is just a Ponzi game with much more history, 3,000 years of history, right? So lots of players, that somewhat legitimizes it. But it's the same sort of game that we're playing. There's a scarce amount of gold, and we're betting that other human beings are going to use it as a store of value. But there's very little of the value of gold. There's very little of that that's actually like utility value, commercial value, that sort of thing. And in another sense, fiat is the same sort of money scarcity type game. It's very much based on a belief that a particular nation state will uphold the scarcity of the asset, not inflate it away. So like money as a social construct is a scarcity game. At least that's what I've come to believe, right?
I think, about you. I mean, maybe this is like a new thought for the world and the rest of the world thinks we're crazy, but I think that this perspective and understanding this perspective is a very useful thing to guide your decision making in Ethereum. And so maybe this is a new thought for the world, and that's fine. But this is a new industry for the world, and to whatever degree that this perspective helps you in your understanding of how these systems work, that is a useful thing to know.
Well, let's talk about the rules. There are a few rules, right? But let's talk about rule number one. Maybe that's all we're ready to talk about today. What is rule number one, David?
Yeah, rule number one, I think we could chalk that up as the only real rule, because the cool thing about Ethereum is that it's infinite and all rules are possible. But rule number one is the rule, and that is the rule of keeping yourself in the game, right? So you can play the game really safely by buying Ether and then keeping it in cold storage and never touching it, and that's really safe. Or you can do more crazier stuff, riskier stuff by going like 5x leverage long on DYDX with all of your supply, and that's really risky. That's breaking rule number one, because going 5x long on Ether is putting you in a position for you to lose all of your resources, right? So like imagine you're playing Zelda or like Diablo or like World of Warcraft, and like you take all of your armor and your swords and all of your like consumables, and then you gamble it, right? Like you try and 5x all of those things. Well, if you lose all those things, then you have no weapon, you have no shield, you have no armor, you have no health potions. Like if you lose all of your stuff, you're out of the game, right?
You see a screen that looks like this.
Right.
You're trying to avoid.
So you can do risky stuff like going 5x long on Ether, but you shouldn't do it with your whole entire stack, because you need to stay in the game, right? You should do it with a responsible amount of money that keeps you in the game. Yeah,
absolutely. David, we should talk a little bit about these games in general, right? Because you've compared these to Conway's Game of Life, because all of these games on the Ethereum, if Ethereum is sort of a canvas for these types of money games, you have all of these protocols, all of these money games going on simultaneously, and they're kind of competing, right? They are also like obeying the algorithms of their code and their construction, and it almost starts to resemble like living organisms. Can you talk about Conway's Game of Life and how that relates here?
Yeah, so Conway's Game of Life is a pretty interesting computer science experiment, and what you see on the screen right now is, and again, if you're watching this on the podcast, go to YouTube, because that's where you get to watch us look at things while we talk about them. But Conway's Game of Life, it's a grid, right? It's like your graph paper in elementary school, and there are certain cells are colored white and certain cells are colored black, and then there's a set of rules for like if you have exactly 3 white neighbors and two black neighbors, then if you are a white cell, then you will switch to a black cell. And then there are certain rules for if you are in one state and your neighbors are in that state as well, or a different state, then you will switch states. And so over time, you can create these patterns of cells that will change based on their surroundings, based on the parameters around them. And so as people created this Game of Life, they found out that using a specific construction of types of patterns of cells, either a 1 or a 0, black or white, will create something that lives, that does things, repeats and recycles and creates something that doesn't die. Like there are these things called gliders that just move forward. There are these like things that interact with each other and make gliders, like a factory contract on Uniswap is how I illustrate that. But the point is that it's very much like a chessboard, a checkers board, and then there are updates to the checkers board, and that's very much like the state machine of Ethereum, because Ethereum moves in this very serial manner. It's like 1 block, 2 block, 3 block, and each of these blocks is a time for people to make moves or not. And when we coalesce all the applications on Ethereum in DeFi, we create this like ecosystem of combining patterns of cells that all interact with each other. And what you see on the screen is some guy who had a lot of time, who made this massive, diverse ecosystem of organisms using Conway's Game of Life, and it coalesces into an economy, right? And so each of these individual little patterns are part of a larger whole that is itself, if you take this metaphor to the end, is itself Ethereum, right? All of the activity in these like different patterns of organisms becomes Ethereum.
So these are all money games, basically, that we're watching. This is like an organic economy is kind of what we see. That's why I love, we brought it up in the last State of the Nation, but that picture of like all of the different money protocols, like where Uniswap was like Pac-Man eating the others. At certain times, some of these organisms will become more dominant and start eating liquidity from others. But this is very much how it looks. It's sort of this organic, set of money games. This gets pretty complex too. Wow.
And I think I don't really know the guy that made this video, how much hours he put into it. I'm assuming it's a lot. But a lot of that complexity must be emergent, right? Like he's like the central planner of the initial state, but the state grows in its own way from beyond that. So some of these things happen automatically.
Absolutely. Well, very interesting. All right, so let's relate that to, as we promised, to something that has been going on currently, or something that happened last week, and that is YAMS. So we talked about this in the last State of the Nation, about and that was really the day YAMS launched.
Yep.
So I guess just to get folks up to speed, if you've been on vacation the last week, right? Like you have, it's just I tweeted this out the other day, like, you take a day off and you miss 8 yield mining opportunities, right? It's just like this stuff is happening so quickly. But anyways, if you missed it, YAM was a kind of a derivative off of the idea of AMPLFORTH, basically, where you have some sort of an asset that rebases. In YAM's case, it was rebasing every 12 hours to kind of meet its market cap. So if it was above $1, the supply would inflate. If it was below $1, supply would deflate. Anyway, the details, the intro, we can check out the last State of the Nation, episode 9. But anyway, what happened was YAMS got absolutely bonkers crazy, right? So this is a contract that was written in 10 days, basically. It was a fork of a synthetics contract, but unaudited, right? Completely unaudited. But the DeFi gamers, someone called them degenerates, deposited an incredible amount of funds inside of the YAM contract in order to earn that gaming reward of more YAMs. So the way it works is basically you have all of these farms that are set up. I'm not going to unlock my wallet. You have all these farms set up, and you can basically deposit in different assets. So you can deposit in YFI or ETH or all of these different assets. And based on the amount that you deposit and some other parameters, you get a return. You harvest YAMs, basically. So we got to a point where there was over 600 million in value, 600 million in value deposited into these YAMS farm, the YAMS farm, and the market cap of YAMS as well. I wasn't tracking. It's difficult. The tracking places don't have exact metrics on YAM, but I believe it got to like 750 million, like close to $1 billion in market cap. Before the whole thing, started to collapse. David, maybe you want to take it from there. So what happened with the collapse? Because everything I talked about happened within about 48 hours,
right?
And then something started to go wrong. You want to take it from here?
Yeah. It was a 48-hour game. And before I finish off the story of YAMS, I do want to talk about how YAMS presented different difficulty levels. And I think one of the reasons why YAMS was so popular is because it had a very accessible easy mode. Because the easiest thing you could do was submit Ether into the system, and then you get YAMS, right? And it's also important when we talk about the safety and security of these systems, because as the listeners probably know, YAMS blew up. But the whole thing didn't blow up. A specific contract of the YAM system blew up. And so the people that deposited their $600 million of value into YAMS, that part was extra secure, super secure, because all the place that you submitted your value was just a bucket for submitting value. It didn't do anything with it. It was very, very inert. And so vetting the risk of these systems takes nuance and understanding, because the part of the YAMS that blew up was unrelated to the place that people submitted their capital. So the submitted capital was never at risk, right? And not from the way that YAMS blew up.
So the way it blew up, my understanding, is all of that 600 million that was deposited is completely safe. But where it blew up was its governance module. So what YAMS was trying to do was take 10% of its rebases on the upside and put that into a stablecoin reserve of sorts. And it was that stablecoin reserve portion that blew up. And the idea was, YAM holders would be able to govern the protocol to some degree and be able to determine what happens with that reserve. So it was that stablecoin reserve that effectively, it blew up in such a way that YAMS could no longer be governed. Is that about right?
Yeah, the treasury the governance module broke. And so there was an interaction between the treasury and the governance module and the rebasing system. So those three things created a result that was like a mutation that didn't go well. Like it was a bad combination, and that's as a result of probably the hastily generated game that had like a faulty game board. Like instead of the path of the game like going to finish line, it like veered off the edge. And so what happened was that governance needs to have a quorum of YAMS, but YAMS rebased, and so the supply of YAMS changed, and so all of a sudden the quorum got really, really difficult, and finding quorum and was needed to happen in a certain amount of time. And then it did happen, which actually a really cool story is like enough YAMS did reach quorum to fix the issue, but turns out there was another bug behind the bug, right? So the governance module, rebasing, and treasury link between those three things didn't link up. And so as a result, YAMS turned into something much closer to just a much more inert thing like AMPLFORTH, but it also had a 10% tax because that's how the treasury was filled. But the treasury was being filled without anybody to actually make a claim on it, right? And so that broke. Now here's where things get interesting, because this was a game and the game ended. Except I think my claim is that the game is still being played, but it's being played off chain. And we saw this happen by people still flooding the YAM Discord, but there being a ton of energy and discussion about YAMS in the YAM Discord. And most importantly, in the course of, I think, like 70 hours, $100,000 got donated to fund an audit of the YAM v2 system that is supposedly coming out, right? And so the YAM community, and also all games on Ethereum require community because you need players. There's a lot of players who are playing the YAM game that want the YAM game to continue, right? They want to remake the board in a way that the path of the board doesn't veer off the edge, but it finishes, right? It does what it's supposed to do. And so it's now a coordination game. It used to be a money game, which was also to some degree a coordination game, but now it's completely a coordination game where all the YAM players are trying to figure out how to get the game restarted, right? And so there's a generally assumed path where the YAM version 1 token is going to be redeemed for a YAM version 2 token, and the YAM version 2 token is inert. It's just a normal ERC20 token, which is this placeholder for the YAM version 3 token. And that token is supposed to, in theory, comes out after the audits, after we have successful audits and with patience. And the game currently is now speculating that is going to happen, right?
Yeah.
And so this is not, the game is not over, and it's still a highly risky game, perhaps the most risky game on Ethereum. But if you want to play the YAM game, you are now speculating that the YAM game will continue or not. So it's now a different game in a different part of Ethereum. Now it's off-chain, and it's a speculation. Will the game make it back onto the board? Like, will we make it back onto Ethereum?
And let's be perfectly clear what the game is, right? Like, I can't use any clearer language than this. This is a Ponzi game, right? It's a game of basically buying low before everyone else and selling high, right? Or holding, if you want, until YAM becomes the global reserve asset of the world. But it's a similar game. Maxi. Right. So it's a similar game as the Bitcoin game, only with far less legitimacy, but a very interesting distribution mechanism in that it's not going to VCs or like being quote unquote pre-mined. Anyone has access to a YAM farm who has some capital. Now, it's still a whale game, to be honest, because the people with large amounts of DeFi capital are going to disproportionately get more YAMs, of course, right? However, it's different than the whale games of venture capitalists in Sand Hill Road and Silicon Valley in that it's accessible to anyone. And I do think that is an interesting distinction in this type of a game, but that's what you're playing. If you're making a bet, as David said, that YAMS will be resurrected in some sort of second version, and you're also making a bet on the Ponzi game. But I thought YAMS may have been dead as well, right? Because it was quite an epic ascent and then descent, and even the developer was like, one of the developers was like, "I'm sorry, guys, like this was a bad idea." But now if you look here, it's not only social coordination going on off chain, but it's also, there's $370 million still
Mm-hmm.
locked in this thing.
Mm-hmm.
That's $370 million worth of farming activity that's still happening. So someone's betting on something here. And then if you look at, okay, so YAM market cap right now, I said earlier it got to like 750 million, something like that. I'm not sure that Etherscan is updating this correctly,
Mm-hmm.
right? So this says market cap of YAMS right now is 25 million, but I'm not sure that this total supply is correct because supply continuously rebates.
Yeah,
Is
and
that right, David?
Etherscan is not equipped for rebasing. It was not equipped for rebasing with AMPLFORTH, and it's definitely not. It's still not equipped for rebasing. Like rebasing is this very creative mechanism that infrastructure like Etherscan is not yet equipped to present.
Yeah. So what you have to do is you have to sort of calculate the scaling factor of YAMS. I actually was able to figure this out from somebody before we came here. Up here, so where you see this would be the correct calculation of what YAMS are right now, the market cap at a price of 55 cents. Be about, instead of 25 million fully diluted, 31 million. So again, quite a descent from its highs, but it seems like people are still playing the money game. David, we put out a thread on Friday,
Mm-hmm.
which I knew would be controversial, but
Yep.
it was basically like, hey, DeFi, hey, Ethereum, hey, Bankless community, do you love or do you hate YAMS? And I'm talking specifically about these types of Ponzi-esque money games, speculative money games. And again, Ponzi, not the Ponzi scam, but Ponzi the game. You have to buy early and speculate. And I feel like the community is somewhat divided. So here's a comment saying, YAM is the symbol of everything wrong in DeFi. It doesn't do anything, right? Like this is not like peak insanity. This will end very badly, like the ICO craze. Others like had a divided opinion, right? Excited that this kind of game is possible in a way that was never previously been possible, but also like it was hastily launched, and maybe the game is sort of not correctly informing noobs as to the risks and speculative nature of it. What's your take on YAMS, good or bad? These types of money games, good or bad?
Yeah, money games, absolutely good. And specific iterations of money games, also very good. Like Yearn and Yiffy, good money game. I would also bucket YAM into the good money game category, largely because it was a fair launch with good intentions. I know 2 of the 5 people on the YAM team. One's Dan Elitzer, the other's Will Price. I've met Dan in real life, and I've met Will online. And so maybe because I know more people in the space than the average person, I have like privileged information just from knowing these guys, but I trust them. Like Dan's a nice guy. I trust his morals. And so from that perspective, for me, YAMS was a good game. And very much in the same way that in 2015 and 2016, ICOs were good. The early ICOs were like Augur and Golem and Gnosis. And the ICO mechanism was a great way to receive funding and distribute your tokens. And then it became bad, right? And then it got milked and milked and milked at the cost of retail. So I understand when people are seeing like, oh, this is the worst of DeFi, is because like maybe there is something here, and maybe the people that are hating on these games aren't seeing like, they're kind of not seeing the good parts because they are seeing the future bad parts coming, and that's totally fair. And if we do think that we are on the cusp of this bull market with a bunch of new entrances, I think what we're going to see is a lot of money games that are very bad money games that are really set up to benefit the people that designed them because they know how they work, and in order to milk retail, right? And that's what we saw with the ICO, where the ICO was initially good, and then people found out that they could milk retail with it. And so that's what I'm worried about.
Also, what about the charge that like these games aren't really doing much for the world, right? So a bunch of early whales like get rich. Who cares, right? Aren't we here to go bankless? What about that charge?
Yeah, so going bankless and leaving your nation state, taking your capital and leaving your nation state and putting out Ethereum is a subject that I think is relatively separate from money games, because you can like take your money and put it inside a compound and earn an interest rate. And like technically the way that we are describing things, we therefore state that you are playing games, and the user may not think of it like that. Like they just may think that I'm trying to receive an interest rate on my money. Like I'm not playing a game. And that's totally fair. Like the Bankless Nation is a much bigger thing than just these money games. The only idea, the reason why we call these money games, is because we are thinking that it's an appropriate way to view these things and understand these things, right? Go ahead.
Yeah. No, I agree. I guess my take is, so Ethereum is an open, permissionless platform.
Mm-hmm.
These things are going to come. And some of the games, as you said, David, are going to be scams and toxic. And some of them are going to be a bit more transparent, speculative Ponzi games. And I feel like our job as the Bankless Nation is to educate folks on the game that they're playing, so they know, right? Like if you were playing the ICO game back in 2017, it was not a game based on any sort of fundamental cash flow, right? So the game you were playing, whether you knew it or not, was a game of selling to the next guy, right? Who buys it at a higher price. It was completely speculative. There was nothing really backing. That's similar to, honestly, what the YAMS game is. It's a speculative game that you're just trying to sell it for higher than you bought it for, essentially. And I feel like if people are clear on what they're actually buying, I think a lot of people bought ICOs in an uninformed way. They thought that success of the project might be correlated with value of the token. They thought that the token itself was like the project itself was real, when in reality it hadn't shipped. All sorts of things. So I feel like the best place to be is to stay educated on these topics, and we hope to play a role in like informing you about these various money games. So if you choose to play them, you know the game you're playing. You know that like there's not someone behind it who can bend the rules in their favor.
Right.
Yeah.
I think it's important to think about where this could go, right? And so we always discuss, like, if you take a day off in DeFi, like, you're behind. I think we are just at the beginning of that. And we saw this evidence by the creation of YAMS, which was the integration of like 3 or 4 other mechanisms from other protocols that the creators of the YAMS system found out, like, hey, what if we took this puzzle piece and this puzzle piece and this puzzle piece and put them together, and that's YAMS, right? Yeah. I think that compounding possibility of possible valid moves is about to explode. Like, we are on the cusp of that. And as more valid moves are created, more and more possible experiments will result. And so we are just seeing the basic primitives. Like, the rebasing invented by AMPLFORTH is a primitive, right? That is going to be recycled and reused over and over and over again. And maybe it's one small component of a massively more complex thing that we create as the developers of these systems get better at developing them. And so going back to that video that you showed on your screen, Ryan, of Conway's Game of Life, we are in the very small, the smallest version of Conway's Game of Life. We are in the very primitive state. But as that game grows, it becomes more and more and more complex, right? We, in 2 to 5 to 10 years, we are going to see some of the most insanely complex and fun games on Ethereum. And they're going to come out of experimentation that we are seeing in DeFi today.
I totally agree. 100% agree. These experiments are net good for everything to come in the future. We're building up primitives here. David, speaking of money games, we should talk about our next set of sponsors. Do you want to kick it off with AMPLFORTH?
Yeah, AMPLFORTH, father of modern rebasing. AMPLFORTH created the rebasing mechanism and is responsible for a lot of the creativity that we see on Ethereum today. So AMPLFORTH is a base money experiment. You could call it a base money game. Very much similar to Bitcoin in that if you own 1% of AMPL tokens, you will always own 1% of AMPL tokens. But instead of having a fixed supply and variable price like Bitcoin, AMPLFORTH has a fixed price variable supply, right? So it's inverse, right? It's not a stable coin, even though the unit of AMPLFORTH tracks 2019 dollars over time. The volatility, it comes from the volatility in the supply, right? So you purchase 100 AMPLFORTHs, and then you will see that 100 AMPLFORTHs go to like 200 AMPLFORTHs or 50 AMPLFORTHs, while the unit will always be $1. And when we're seeing how successful of a mechanism this is in the way that people are copycatting it and using it in their own protocol. So check them out at amplforth.org. They have their own liquidity incentivization mechanism called the Geyser. If you supply AMPLFORTH and Ether to the Uniswap pool, you can get a little extra bonus of AMPLFORTH tokens. And so, yeah, that's AMPLFORTH.
All right. I also want to tell you about a POLYMARKET. So the quest for prediction markets on Ethereum and using DeFi protocols continues, and Poly.market has a really interesting take. So if you go to Poly.market, you can bet on your beliefs. This is like an information market. So you can see some of the market categories they have: coronavirus, crypto. You can even create your own markets. This is an interesting category we've talked about on Bankless. One of my favorites is make a bet on will Ethereum V2 phase 0 launch before 2021. 64% think yes. 36% think no. What do you think, David? Just curious.
I think that's fair odds. I think
Fair
that's
odds.
fair odds.
All right. So
odds.
David might enter this market equally on both sides, I guess. Well, that would make him net zero. I'm not sure what David would do with this market. But if you want to bet on things like that, you can. They even update it with interesting things like amount of YAM being delegated. So you can go to poly.market and start betting on DeFi protocols. And if you do this and you email hello@poly.market with Bankless in the subject line, they will cover your gas costs and give you early access to unreleased features. Gas cost coverage is a net benefit in these times of 200, 300 Gwei gas fees. So check them out at poly.market. We'll include them in the show notes as well. David, let's talk about our next topic here. And then what we'll do at the end is kind of turn it over to the Bankless community and the YouTube to ask some questions and finish this off. But let's talk about Curve really quick. So Curve released their token. They started releasing their yield farming mechanism for their CRV token last week. I was shocked at the market cap, at the price of this baby when it launched. So here it is.
It got up to like $80 billion, didn't it?
Yes. So here it is on CoinGecko at 70 billion. They must take like some kind of a one-day average or something.
Yeah, that's showing 70 million, but they're missing 3 zeros there. It was definitely 70 or 80 billion.
Yes, it was. And when I looked on, in fact, I don't think these numbers are accurate. Well, this is accurate as of now. It's worth $11 billion right now. When I looked at this on Saturday, we were like 130 billion, 120, 130 billion. So it briefly exceeded the market cap of Ethereum. I don't know. Did it exceed the market cap of Bitcoin?
No, not a maybe. Bitcoin. Bitcoin's like 250 billion.
Okay. All right.
That would be crazy.
Getting close though, right? Getting close. So an absolutely insane valuation, at least at first. And the way it launched was somewhat odd, right? So the way it launched was basically the Curve team had put out some code, sort of an unreleased version. And this person on Twitter or organization on Twitter, a simple farmer, DeFi Chad, he was the one who activated the Curve governance contracts, the Curve yield farming mechanism. So individual group paid $800 in gas fees to activate this contract prior to the Curve team formally releasing it. So a little weird, a little interesting. And there's lots of speculation around that. So anyway, back to the facts. So it was activated, and then Curve came out and said, since it was activated without our permission, our knowledge, we're just going to go with it because we have no other choice. In the meanwhile, people had started to yield farm Curve early, right? And if you're in early with yield farming, you kind of
you get outsized returns.
you get outsized returns, right?
Because
So
no one else is yield farming, so you have a disproportionately large part of the
exactly,
pool.
exactly. So there's controversy over the launch. The value of the token has fallen steeply, of course, which it had to. I mean, that's
It
just
was
gravity, but it's
appropriate too,
still
yeah.
it's appropriate. It's still $11 billion, which
Right.
seems awfully rich
Yep.
for a capital asset. But yeah, that's basically what happened, and there's some controversy around it that we could get into. But David, do you have any quick takes here?
Yeah. So the controversy around the launch was that, we are now kind of used to the status quo of fair launches, right? Like no VC pre-mine, no founders rewards, but the money's still enticing. And so the nefarious, malicious opinion of what happened was that this DeFi Chad guy, who's an anonymous Twitter account, this was a plan, right? And the plan was to deploy the contracts under this anonymous account, and then from Curve they say like, oh, somebody deployed our contracts, but somebody got to like basically pre-mine. It's basically a pre-mine because it was released before anyone knew it, right? So the criticism is that this was really done by the Curve team, and they just wanted to have the outsized returns. I don't know. That is a thought. There's nothing to back that up. I don't know if that's true or not. But that is what is the worst, the least generous interpretation of those events.
Yeah, that's what I think a good summary of that interpretation or that possibility and criticism of the way it was launched is found in this Twitter thread by Adam Cochran. So we'll include that in the show notes. But it does seem that whatever happened with respect to like the fairness, sort of people getting in early, it seems like this was maybe done to avoid some regulatory scrutiny, right?
Also
Just kind of
totally
like
fair.
right?
Also
It's just
totally
kind of like
fair.
hands off.
Right.
We didn't deploy this thing. Somebody else did. We
Right.
don't know who.
Yep.
Which is quite interesting as well. I don't know if you've seen any crypto lawyer feedback on that, like a Jake or somebody like that, but
No, Jake would never say anything
he
on
wouldn't
public
touch
Twitter.
it.
No.
He wouldn't touch that.
Yeah.
Yeah.
But that is a good point. There are unknown regulatory risks with launching these things because there's absolutely zero sort of information about the state of whether these things are compliantly dubious regulatory issues. It's unknown, and so it's fair to assume that like these people that are kicking off these yield farming events are trying to disconnect from that. That's fair.
Yep. And we will include a link to where that yield farming can be done, just in case you're interested. Again, like the earlier in these protocols you start yield farming, the more risky it is.
Yes.
So
right.
this again is maybe not quite YAM on the spectrum of risk,
Right.
but it's pretty close.
Going through the door first is risky, right? And I would also say even the design of Curve is this is not an easy mode game. This is a hard mode game, and largely it's because of the gas fees, right? And so I actually started to farm Curve at the very beginning because the returns were ridiculous. At an $88 billion valuation, you could make just a ridiculous amount of returns. It was something like 50,000 APR for like on an hourly basis, right? So I'm like, okay, like I'll go into yield.
It's
farming.
worth the risk at that point.
Yeah. Now I'm not like the biggest DeFi whale, and so I got burned on gas fees going in and out of the pool. So it cost me 0.5 gas to get into the pool and 0.5 ether to get into the pool and 0.5 ether to get out of the pool, and I farmed 0.35 ether worth of Curve. So I got burned. And so this is not a game for everyone. And this is kind of why it's advantageous to be a whale in the space, because you can pay for those gas fees because it's more efficient, right? And so when you are making the calculus as to what moves you want to make or not, like I messed up and I lost that game because I have less money than I do now. And so therefore I lost, right? And so
you messed up because of gas fees.
I messed up because of gas fees, right?
And by the way, what do you deposit in Curve? That's like some sort of a you like a stable coin, right? Like you deposit a DAI or you could deposit a USDC or something.
This is also why this is not an easy game, because it's a two-step game where you deposit stable coins, your preferred stable coin, USDC, Tether, DAI, and then you get the Y DAI, Y USDC, Y Tether version of that, which is the interest-bearing version. And then you submit that to the Y Curve DAO governance portal, which is then where you get your curve tokens. That's where you start farming, right? And so it's a two-step process, whereas YAMS was a one-step process.
Yeah.
And getting in and out of the Y curve stablecoin pool is really expensive, really expensive.
Yeah, and just like converting what you said, 0.5 ETH into dollar terms, right? So like, I don't know, $150.
Twice. So I spent a whole ether in gas to receive a third of an ether in farmed.
Okay, so $400. Mm-hmm. You spent $200 mm-hmm. to receive how much ether?
0.34.
Yeah, so net loss, right?
Net loss of 2/3 of an ETH, yeah. Mm-hmm.
And that is why I think I think some within DeFi are starting to get upset and a bit jaded at these gas fees, because the argument is, hey, like if gas fees are 300 Gwei, then the only people that can afford gas fees, high gas fees, are folks that are dealing in large capital pools, right? So like to make that trade worth it, basically what you said is like, I'd have to have at least $1,000 or so, right? Mm-hmm. Or actually, I'm not sure how much
for Curve,
10,000.
Way more, yeah.
Okay. So I'd have to have, and that was when Curve was sky high, right? So if I was depositing Curve now, then like, different story. I'd probably need like, I don't know, $30,000, $50,000, something like that before it's even worth it. Mm-hmm. So that is the criticism. What do you think of that criticism, David?
I think it's totally fair. And that's why the current gas markets is not good. I mean, it's good for Ethereum because fees are good, but it's really crowding out a lot of, smaller players that want to play games. But it turns out like the current games on Ethereum are like, $5,000 minimum poker tables, right? Like,
yeah.
like that, it's just not suitable for everyone. And so a lot of people are on the sidelines, like watching all these like rich whales have a lot of fun. It's not the best environment. I'm not going to say that I'm happy about it.
And yeah, not only have a lot of fun, but also make a lot of money.
Right.
And then sometimes dump that on less savvy players of the game, basically. Mm-hmm.
Yeah. So like somebody who might not understand how to vet games very well might look at like, okay, yield farming, I don't really know how to do it. It sounds risky. The gas is really expensive. You know what I'm just going to do? I'm going to buy the Curve token. And if you did that on the first day, you bought a Curve token that was valued at $88 billion when Ether was valued at like $40 billion. So that also wasn't a good move either. So really you were kind of just forced to sit out, right? And if you didn't know how to evaluate the game, you might have made the mistake of buying Curve at an $88 billion valuation.
Yeah. Yeah. It's interesting in our podcast with Hasib, which is coming out next Monday, we talk a little bit about that, like DeFi in layer 2, DeFi in ETH2, right? And how the main chain basically is shaping up to become a settlement chain, right? The original Ethereum 1.0 main chain is kind of like a Manhattan, basically, where things are going to get really expensive and not all transactions can be done in Manhattan. It will become like a town, an area, a district for the wealthy. And that is the economic reality that I think ETH1 becomes a settlement layer. But that's why we need layer 2 solutions. That's why we need ETH 2.0 to create some more space, some more geography, some other, like Hasib calls it, other suburbs, other farmland that where gas fees aren't completely prohibitive. We get some more room to breathe. I'm pretty bullish about that in the long term, but I think in the short run, it's going to be tough. But we are seeing things like optimistic rollups, layer 2. I think that'll start showing up in fall, and that uses the security of the Ethereum main chain for things. We're also seeing things like XDAI, for instance. This is just a side chain. It doesn't use the security of Ethereum, but you can run DAI, for instance, in XDAI, and it's reasonably secure, right? Like it's almost like a crypto bank level of security. So there's lots of different things that I think are going to scale this out, but I don't expect an immediate fix here. I think, I think it's going to be some, 200 to 300 Gwei prices for quite some time.
Yeah.
It's not going down.
Yeah. The important thing about all the development and scaling solutions is that there are many different paths to go down, and it's really all about optionality, right? Like sharding creates options. L2 systems create options, like rollups create options, XDAI creates options, and these options compound upon each other, right? And so we don't get linear scale in many different directions. The optionality of being able to scale multiple things in multiple different ways is really how small fries, people with like less than 100 ETH, less than $10,000 can play some of the similar games as the big guys, right? And because of that optionality. Also, I do want to bring up how Yearn and Yiffy, what Andre built with Yearn is a gas optimization mechanism, because anyone that is yield farming with their capital is making a bunch of transactions on Ethereum, and they're all doing that. But instead, if they just deposit their capital into Yearn, into this automated thing, if 500 people were all making 500 transactions each, trying to maximize yield, and instead they put it into Yearn, that's one transaction for 500 people that does the same thing. And so that is also this internal scaling solution, which just makes things more efficient. And this is how Bitcoiners actually think Bitcoin is going to scale. If you played an Xbox 360 game in year one, and then you bought an Xbox 360 game that came out like a decade later, the graphics were like orders of magnitude better. It looked like a different system. And that's because the developers just learned to be more efficient with like the graphics of that game. And I think that's going to also become true about developers that, not too long ago, gas prices were 1 gwei, right? Like two or 3 or 4 months ago, but gas prices were 1 gwei. So developers weren't really incentivized to figure out how to be efficient. Now developers are really incentivized how to be efficient. And so we're experimenting in efficiency in all different directions, and that efficiency compounds. And having optionality in how you scale is really important for having that compounding scale.
Yeah, I mean, look at a city like Manhattan, right? I mean, there was a time where it was relatively like flat. You're talking 150 years ago. And what did they do to scale partially? Well, they built skyscrapers, right? That's kind of how it could emerge.
And they also built down,
more
right, with the subway.
Yep, more efficiency through each unit of geography, more efficiency through each unit of block space. And you're right, the economic pressures will sort of force them into that. I was listening, last thing, and then we'll turn it over to the folks in the Bankless community for questions. I was listening to the Peter McCormick Vitalik interview with Samson. Did you catch that, David?
Yeah, it pissed me off, man. I had to turn it off last night. And this is one thing I'm concerned about with Vitalik, because I wanted Vitalik to take the offensive, because he wouldn't. Vitalik is very, very peaceful. He's very pacifist. And Samson was being a fucking asshole.
He was being a bully.
He was being a bully, and he was just being a wrong bully, and Vitalik wouldn't call him out on it because of how nice Vitalik is. And like, it was the most disingenuous.
But don't you think, David, like that came through to anyone who was listening?
I'm not so sure, man. I'm not so sure, because Peter McCormick's audience are a bunch of Bitcoiners that hear things like what Samson Mow says as like gospel. I am not so sure.
Yeah, I mean, one of the things that kills me with criticism is like things like, and this is back to our question, our earlier conversation is, kept pressing Vitalik on gas fees, that sort of thing. Bitcoin has the same freaking problem. Yeah. When Bitcoin is in high demand, Bitcoin block space is in high demand, transactions become too expensive to use. Only, you know what they do to scale Bitcoin is it scales essentially on crypto bank infrastructure on side chains like Coinbase and Binance and that sort of thing, right? Whereas Ethereum has a slew of other options. I just find a lot of the criticisms aren't equally applied to both networks.
Absolutely.
But one thing in the interview, I don't know if you noticed, but Vitalik gave a couple shout outs to Bankless.
Oh, I must have turned it off before that.
Oh, dude. Yeah, get there. So he talked twice about conversation in the Bankless podcast that we did with him, and then he also used the term economic bandwidth.
He did. I did hear that. Hear that. That was pretty cool.
Yeah,
the part that pissed me off the most was and to continue your conversation of how Bitcoin scales. Bitcoin is going to scale on Ethereum, and that's going to be how it scales without having to succumb to crypto banks. If you want to use Bitcoin expressively, it's going to come to Ethereum. Bitcoiners got really excited about the MicroStrategy purchase of like 21,000 Bitcoins. Well, there's 43,000 Bitcoins on Ethereum. Like, that's twice as big.
Yeah, so converting that into monetary terms, it's 250 million versus like something like 500 million, right? So MicroStrategy purchased 250 million Bitcoin, And there's already 500 million tokenized Bitcoin on Ethereum.
Right. And so Ethereum is going to scale. We are currently scaling, and Bitcoin is going to scale by coming over to Ethereum. And what really pissed me off the most was that Samson Mao said to Vitalik, to his face on the podcast, lying through his teeth, that people in DeFi are preferring to use wrapped versions of Bitcoin instead of Ether.
Oh, dude.
Because
I caught that.
It offered a stronger foundation.
Is that where you turned it off at that point?
That's where I turned it off. I was like, this is absolutely ridiculous. Okay,
it's a lie.
The belief is that Bitcoin itself is a very sturdy foundation, and that you build big structures on sturdy foundations, and Ethereum isn't that sturdy of a foundation. That's a fair criticism. And that's the criticism that was baked into that argument. But what Samson Mao forgot about is that in order to get Bitcoin onto Ethereum, you have to have trust in something like RenBTC, that you have to make sure that protocol works, or wrapped Bitcoin, you have to make that BitCo is going to do that correctly, or TBTC, like they haven't gotten out the gate. But he just glossed over.
TBTC, you actually have to have ETH to make the trustless Bitcoin work.
And so he just glossed over this massive trust assumption that this is just going to work, because he wanted to spin the narrative of just like, people in DeFi want to use WBTC, which is just abjectly false. Yeah. Oh God, it just fucking riled me up.
Me too, because I think that is the deception that's going on, right? Like, to be honest, the Bitcoin story is simple to understand. But like when they lie about the Ethereum story, it frustrates me. Here's the thing is, the other thing Samson was doing that pissed me off is, I consider myself a Bitcoiner. Right. All right.
Same.
Like if you ask me, but I'm not Samson Bitcoiner. Right. Like that, like Bitcoiners are right. Maximalists are wrong.
Right.
You know, like I can be a Bitcoiner and also be an Ethereum.
Right.
I mean, that's what the Bankless Nation is. It's optimizing for the most bankless money system wherever it exists. And so I think his painting of Bitcoiners as pure maximalists is, it's just not going to age well. I don't think that's why people are entering the space for.
You know what I think he's doing?
What?
I think he's playing the Bitcoin game. And the Bitcoin game is to get everyone to buy Bitcoin. And so he's playing a game where he is trying to brainwash people by lying in order to get them to play the game. Because when more people play the Bitcoin game, Bitcoiners, the people that have already been playing the Bitcoin game, win, right? And so I think it is and also, Samson Mao comes from Blockstream, which is an attempt to build a expressive sidechain for Bitcoin on Ethereum, or BTC on Bitcoin. And there's no bigger, stronger competitor than Ethereum to Blockstream. It's not Bitcoin versus Ethereum, it's Blockstream versus Ethereum. Like, no shit, Samson Mao doesn't like Vitalik and what he's built, because his Ethereum is going to make Blockstream completely redundant and unnecessary. And also, by the way, James Presswich, who is a very great developer on both Bitcoin and Ethereum, discovered a bug in the Blockstream Liquid network that is where this Bitcoin gets its expressivity, that would allow someone to steal all the Bitcoins. And like, he's talking about how Ethereum is like this shaky foundation, while his own Liquid had this bug for months that no one discovered because no one fucking uses it. Excuse me for using the F word.
Look, man, I think you're right. I mean, full circle here, right? Samson is playing the game. However, I have a massive problem when you're playing the game unethically, when you're lying about it, right? And by the way, that's not the game I'm playing, right? Like, I want a money system to actually be good for the world, right? I don't fucking care if like Bitcoin gets to trillions of dollars, but all we're left with is a banked money system that doesn't restore self-sovereignty to individuals. Like, that's why I'm here. And I do think the tide is shifting a little bit, David. Like, I think people who listen to Bankless and then tune into the McCormick interview are like, oh, wow. Is this really the kind of the intellectual mecca of maximalists? Because it's empty. It's like a dry closet of skeletons. There's like nothing there. There's no organic material. There's no substance there. So that's why I continue to listen to the episode, because I was just like, wow, this is the best you've got.
Yeah.
It's, man, what I want to see a debate of is honestly like an Ethereum debating on like Ether. I feel like we could make the argument a little bit better
Right.
as
Yeah.
to why Ethereum might fail.
Yeah. Absolutely,
But
we
that
could.
was not it.
Yeah,
That was not
that
it
was
for
not
me.
it. No, that was a bag inspired conversation from Samson Mao. And
Yep.
that's kind of what, like, Vitalik's such a nice guy. Like, he means the best. He doesn't really want to get offensive, but I would love to see a world where Vitalik like brought out the teeth. Because he could,
Dude.
Vitalik's very witty, Vitalik is really clever, and I think if he wanted to, if he practiced at it, he could destroy Samson Mao.
Yeah, I know. He's just
He's too nice. He's too nice.
he's a better human, to be honest.
Yeah, he's better than all of us, that's for sure.
Yeah. So anyway, all right, we went on a rant there at the end, but hopefully you guys enjoyed it. Let's turn it really quick to any questions. So
yeah, I've got one. What's your guys'
sure.
take on staking on a validator node versus yield farming? I have my answer for this one, Ryan. What's your answer?
Okay, so it's a risk return answer, right? So I commented earlier on Twitter that all of this yield farming in DeFi is preparing us for the greatest yield farm in the world, which is staking our ETH, bonding our ETH, the initial bond offering of Ethereum. Now it's different. People replied and said, "Oh yeah, show me where the 1,000% APY per day is on Ethereum." It's not there. So staking Ethereum in a validator, taking your ETH and doing it there, is going to be a much lower risk, not in the early days, right? Because ETH2 is new, but eventually it's going to be a much lower risk place to put your money. So, you know how in the regular traditional world, people call the risk-free rate, that's basically like the Fed rate for returns on T-bills, essentially.
Mm-hmm.
That's what staking ETH is going to be. It's going to be the risk-free rate of the Ethereum, the DeFi economy, essentially. So much lower risk, right? Because in order for ETH staking to fail, the entire protocol has to fail. Just like with T-bills, right? In order for the US government not to give you your money, US government has to go away.
Right.
Like foundationally, it's gone. So it's a much lower risk way to get a steady return. It's not the wild cowboy stuff of like 1,000% per day, but honestly, a portion of my funds personally, I want to be in the crypto equivalent of the T-bill asset class,
Absolutely.
right?
Absolutely.
Yeah.
And it's important to so the question framed it as returns on ETH staking versus returns on yield farming. And actually, I think you can categorize as ETH staking inside of yield farming, right? You are farming yield. And the best thing about staking is that it is designed to be as easy as possible, right? It is supposed to be like the tutorial for people coming into the Ethereum game, right? Like the basic, most simple, and most trustless thing you can do is you can stake your ETH, right? And again, like you said, ETH staking when phase 0 goes live is going to be hard. It's going to be expert mode and it's going to be high risk. But the idea is that the UI and UX around the clients for staking your ETH and also other systems for doing it for you will make this easy, right? The goal is to make this like the 101 game, right? Like you enter the game, you go through the tutorial, and that tutorial is staking Ether. Because the reason why we want that easy is because staking is supposed to enable maximum decentralization. So it has to be easy. If it was extremely difficult, then Ethereum wouldn't be decentralized.
Yeah, exactly. And I guess maybe one other thing, of course, is because of the super fluidity, as Dan Elitzer would say, of these protocols, who's to say you won't have a way to essentially take your tokenized staked ETH and then also add some risk, add some return to it, and start yield farming with it? There will definitely be ways to do that in the future. So maybe you can have your cake and eat it too.
So here's a question from a YouTuber. What do you think about chains like Polkadot, Fusion, or other interoperability chains for scaling? And I'm going to use this opportunity to shill our coming episode with Hasib, which is coming out next Monday. Hasib gave a pretty interesting classification of Polkadot, where Ethereum is supposed to be like Manhattan and its suburbs and its farms. Polkadot, the way Hasib classified it, is as like a one city per application, right? And so that application has its own domain, it has its own realm, and that allows that application to scale up. And so, I'm not an expert, and so I can't really comment on like the more nuanced designs of Polkadot, but that categorization was interesting to me.
Yeah. I think my take is similar. So my take is probably in that Hasib episode a little bit. So I think that probably, this is a thesis, that probably, in order to have a main chain, a settlement chain, the reserve asset behind that settlement chain has to be money, because any reserve asset that becomes a money has trillions of dollars in economic security. There's no better way to get security than to be memed into a money, to be used as a money, right? That's why gold is worth, trillion, 7 trillion, and silver's like not even a trillion, right? Because it has a money meme attached to it. So I think there are probably some power laws to that where not everything can have that. And Ether certainly has a head start as a main chain with economic security. Polkadot, I feel like a Polkadot is kind of discluded from the race there a little bit, right? So part of the reason why is because first, there's governance, almost a plutocratic governance. So if a majority of dot whales decide to change issuance or make some decision to the protocol, they can vote and make it happen, right? That kind of governance, on-chain governance, can't happen in Ethereum. And that sort of on-chain governance, I think, is not probably conducive to a monetary system underlying. So how shitty would it be if Facebook and all the Facebook stockholders essentially had the ability to owned the governance of the global reserve currency of the world? It would be very bad, because then Zuck could do whatever he wants with it at any time, right? So we're here for a more neutral monetary system. Anyway, for reasons like that, I think that Polkadot and other things like it become a side chain to stronger, more credibly neutral settlement layers like Ethereum. But they all work together at the end of the day. And by the way, could be wrong about some of these things. It's possible that dots or atoms through some roundabout way starts to accrue monetary premium. But that's my take right now anyway.
Yeah. And I think that's the correct take for the information that we have today. And I think when Polkadot goes live and inevitably interoperates with Ethereum, because what else are you going to do? We will have to update that take if anything changes, right? Because then we'll have more data. But I think for now, until we have more data, that's the right approach to evaluating these things that are not quite live yet.
Very good. David, should we do one last question?
Yeah. Do you have one? I cannot find another one.
Well, I've got one that's super easy. When Bankless merch, I think the people want these t-shirts, man.
I think they do want the t-shirts. I think that's true.
So we're working on it, guys. So I have a box sitting over there actually with some Bankless swag, with some Bankless t-shirts. We did our scarce swag launch season 1 first. So that's out there, but that's a more kind of scarce premium. The Ethscape shirt is a more, premium product. We're going to get some normal merch like this. Hopefully, I'm going to say within the next month, because I feel like, I've got some economic bandwidth to do that. But we're working on it, guys. We're definitely going to get you guys some swag.
I really want to walk into my Wells Fargo wearing a Bankless hoodie.
I told you I did it. I did a wire from a bank in my Etherscape shirt. It's awesome.
Yeah.
It's
So that'll be fun. That'll be fun.
All right. All right, man.
In 3 weeks, there will be some cool news. And I'll leave it at that.
Very good. Hopefully, maybe we can announce on State of the Nation what that cool news is.
I think we shall.
All right. These are going live every day, guys, at 10 a.m. Eastern. That's 2 p.m. UTC. That's 7 a.m. Super early for you, David. Look at your Bankless dedication, man. This guy wakes up at 6:30 to get ready for these. I just want to...
Puffy-eyed live stream.
Yeah. And, so thanks for joining us. We'll live stream these. The recording will be on Bankless as well. As always, guys, this is not financial advice. Crypto is risky. DeFi is risky. It's not for everyone. We are going Bankless, though, and we are glad you are with us on the Bankless journey. Thanks a lot.